Hello folks, I'm L.A. Little, and this is your daily TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened today and what does it tell us about tomorrow. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of what was another hot Rocky Mountain day. Folks, I also do a show on a weekly basis, every Sunday night, same time, same place. And as you know, or probably should know by now, we are broadcasting now on YouTube. Anytime, anywhere, you can take it with you, catch it on your mobile phone. The instructions are up here on TATV. Just pop in here, all channels, you can get the instructions on how to do that. As for this market, it had a tough day, but before I get started, I wanted to have a moment of silence for a dear friend of mine who's struggling. Had a long conversation with him today, and I'm just going to have a moment of silence for him. Harry, I wish you the best, my friend. All right, let's take a look at these markets and see what actually took place today. So Dow Jones down 170, 14,776. S&P's down 26 at 1630.5. So 1630, folks. We're about halfway where we're trying to get. Composite down 79 points, 3578.5. The index 63 down. And these were 1.5%, 2% moves, 2.5 on the Russell. 59.5 on the index, and the Russell was down 25 points, 2.5% almost. 1013.48. It's trying to get back to that 1,000 mark. That was where it left off on the way up. So if we poke over and we look at the charts to see what's happening here, what you're going to find is, if you remember last night, we were talking about the situation where we were more than likely going to see some selling today, and selling indeed is the name of the game. So let me get I'm working on one screen tonight, so let me get my screens up here. So S&Ps. All right, here we go. S&P 500. So we break down underneath the B point. That's a bearish ABCD down. That projection is about 1609. If you look at it on the weekly, it's about 1600. 1600 takes you down into this little support zone you see down here at swing point lows, and actually would break a swing point low if it actually fulfilled and stayed there. But that looks to be the target. The swing point lows look to be the target on the S&P 500. As you get the break, volume expands, it's confirmed. That's where it's trying to go. S&Ps want to go lower. Dow Jones. Actually, let me get the Dow up instead of the DIA. Here we go, the Dow Jones. Okay, Dow Jones also break to the downside, break a B point, doing a bearish ABCD down as well. Measurement on this one is even deeper. Let's see here on the Dow. I've got the measurement at 14,551. That's going to take you right down into the lows. Those are the lows from June. It's going to go down and test them. That's where the Dow is trying to get. If we move over to the NASDAQ. On the NASDAQ, now on the NASDAQ and the NDX, it's a different story in that you don't really have ABCDs down. I mean, you will have bearish ABCDs, but they don't measure to anything. And what I mean by that is your high at the top was 36.91. You pushed all the way back up to 36.84. So it's really just 7 points that you tack onto your B, which is nothing, right? That takes you down to 35.82 if you want to do the measurement. But I don't think that's, 35.82. But I don't think that's the issue. The issue is we come off, volume expands, and we have swing point highs that we have not tested on the composite. They're way back here. And if I look at the composite, there was a swing point high that hasn't been tested yet, and I can see it over here on the weekly. Let me pull this in some so we can see better. Sorry about that. If I pull this over on the weekly and take a look at it, you can see that swing point high is back here. That's also an untested swing point high on the dailies. That's at 35.32. That is where this thing's trying to go. It wants to go test, do a retest, and try to regenerate higher. 35.32 takes you back into this area, right about in there, right? That's going to be in this gap area, and that's where the swing point high sits. Although on this time frame, it's already moved off the chart, but it's still a swing point high over there, and it will come into effect. So that's right underneath where you see support at the moment. Once this redraws tonight, these are going to go away. You're going to see a support zone right back down in there. The NDX, same situation as the composite. You break underneath, both of these broke underneath and closed underneath that low from last week. Both of them broke underneath the low from the Thursday bar. 17.4 there. We did 16.4 today. Let me go back and look at the NDX and see what that number was. So that number here was 17.4 and we did 16.4. So you can actually see that we're breaking with lighter volume on the strongest index, and that actually is a good thing for those of you that want to be bullish on this market. So anyway, we're breaking down. Let me go back to the NASDAQ here. We're breaking down. This one wants to come back in, and excuse me, I was on the NDX. On the NDX, that wants to come back in. Now the swing point high here is 30.53, and we hit 30.53.26. Let me see, that high from before on the weekly was 30.53.51. So we actually got into it today. So we're doing the retest, regenerate on the prior swing point high. And I really shouldn't say retest, regenerate. We're coming back into that high. That high has already been tested here once before. So we're really coming back into the support zone. There will be another one draws today. This thing wants to try to get back into the gap and get into these swing point highs. That's where it's trying to go. So this swing point low, these swing point highs, that's where you're going to see a support zone draw tonight. Now that these have been wiped out, we only show 3 at a time on the charts, so you'll see them redraw as of tomorrow. But that's where it's trying to go. Now the one that's really interesting is the Russell. Now the Russell is the one I've been watching for the retest regenerate. Remember back in June, the Russell was the last one to come back and actually do the retest and regenerate higher, and that was when we got this V-shaped move off the bottom. So the Russell is coming back now. It's going to try to set up an ABCD down, a bearish ABCD. 10.13.23 is the low. 10.13.49 was the close today. Volume expanded. It's higher. It looks to me like it's definitely going to test it tomorrow and more than likely break it. Now if it breaks it, that measurement is past the retest regenerate top. That's that number is going to be, let me pop them in here, I didn't quite get through. So that's 106.3, let me see here, 105.4. So 105.4, let me see what the numbers are here. 105.476. And if I take the low at 102, 101, 3.23, and then take the high 104.466. That projection is the one. Oh well, look at that. It comes right into it. 1,353. So that would be the measurement on this. Would take you right back into the swing point high, and that would be the retest regenerate. And I suspect you're going to see this market try to turn when it gets there. So that's it. Now, when we're doing retest regenerate, so when I talk about those, the first trip back after 6 bars has a high probability of being bought. And that will probably be the case as we come in here. When you're retesting, you can go to the bottom of the bar, but typically if it's after 6 bars, you only get into the top of it. That top is 999.77. The projection is 103 or 1003. So I suspect we're going to try to get right into that area. All right, let's go look at the sectors. Now the sectors today, almost all of them started breaking down and doing the ABCDs bearish on the downside. Now, when we talked about it last night, The indexes didn't look nearly as bearish as the sectors. The sectors were the giveaway last night when I told you, unequivocally, I told you that we weren't going to open higher. We'd be flat to lower. We gapped down. We never looked back today and got kind of a wipeout day. Tomorrow, we'll talk about tomorrow in a minute. Let's look at the sectors real quick. So here's the IYT, gaps off, comes down. Volume's not that big. IYT still looks like it's going to try to hold in this area. I would think the IYT can get back into the support zone. That's about 111.15. It's trading closed today at 112.69. So not all that far down to go, another percent or so. The SOX was the one that got creamed today. Does an ABCD down. And I haven't done the measurements on these, but maybe we'll just pop them in here as we go. On the SOX, that is, let's see. We got a high here of 65.28, because if these measure about the same, then what we're going to have is we're going to have a situation where the sectors and the indexes are going to try to end up in the same spot. And when that happens, that's a good thing, because you can count on it more than you normally would. So this one right now is trading at 61.37, the low today. The projection 60.73. 60.73 takes you into that swing point low. And I think on all these ABCDs, we're going to see that swing point low from June being the target, just as it is on the Dow, right? The Dow's doing the same thing. So let's keep going here. Let's see what the other ones look like. So the SOX, ABCD down, measures another point. Right down to swing point low. We don't have an ABCD down on the XLB. This one's actually holding up pretty well. A large part of this is the commodities are actually rallying. You've got oil up, you've got the precious metals up. They have been beaten down all year. This has been one of the weaker indexes most of the year comparatively, and now it's getting its day in the sun and it's holding up pretty well. I don't know if that's going to last. I wouldn't go jump into this thing. But it is holding up better. There's a swing point low. It's fixing to attack, probably break. I would think it gets back into the support zone. This bar from back on June 20th is the bar to watch. XLE does an ABCD down. Excuse me, not the XLE. The XLF is the one I'm thinking about. XLE actually just comes back off the high. Had a nice big bounce. And again, oil is going up and is keeping this guy up here. I would think it works back towards that support zone. The XLF is the one I was thinking of, does an ABCD down, volume expands. Remember, XLF was the strength most of last year and all of this year. It was the leading sector. And if we pull over and we look at the weekly, you can see what I'm talking about. All you have is swing point lows all the way up, folks. You only registered 2 swing point highs on the way up. You broke one of them, now you're back underneath it on the weekly. You're going to break it more than likely with volume once the volume calculates out this week. You can see you've broken on an ABCD down here, and if we do that measurement, it's going to be from this price point. Let me kick this one in. This one's an important one. XLF. Let's see what the number is real quick. And you can do the numbers with me if you want. So we take the top, we look for the first retrace bounce, and it looks like right there. 2061 is the high. If we take the next low, 1972, then we take the next bounce high, takes us up to 2014. That gives us a projection of 1927. We are at 1941. 1927 is just under the swing point low. Again, that's what they're doing. They're going after all the swing point lows. That's going to change trend on the intermediate term time frame. Okay, so that's the first step to actually move from a bullish to a bearish market, right? You got to change trend, and you got to change it on the intermediate term time frame. Now that will only make it, in most cases, sideways, and that's not the end of the world, right? That could just be a healthy retrace, but it's the first step to actually being something larger, and that's why you always have to monitor these things and make decisions. So it's coming into a big bar. Into it already. So that top was 1949. We're at 41. Yeah, it's going to get this little zone that's going to be right in there is where it's going to try to get to. So it could get as low as 1910, probably in this 1927 area. break the swing point low. Now it may not stay under it. That's a different story, in which case it wouldn't transition if it didn't. So that will be another thing that we monitor. XLI also does an ABCD down today. Volume expands. This thing's coming down. It's gonna break. It's already broken this swing point low. It's about to break the next one tonight. It looks like it already has. So you've actually got a bearish trend here. I think I misspoke a while ago. XLF. Let me go back to XLF. Yeah, that would not be. I misspoke on the XLF. That would not be a break on the intermediate term time frame. You would have to break here, 1858. That's a long way down. So got ahead of myself there. So breaking to bearishness on the short term. Intermediate term still in good shape on most all of these. XLK. This actually got hit pretty hard. Apple couldn't hold up today. Apple shed about 13, 14 points. Remember, with the icon takeover, the modern day robber barons, nonsense that they do. How can you have someone tweet that he's taken a large position in a stock and then profit by that tweet to the tune of several $billion? That's nonsense. But that's the world we live in. Okay, so anyway, the XLK is coming into the low. Now this one's interesting. It doesn't have a volume. That low is 31.37. We close at 31.36, so you're into it. XLK will be one to watch tomorrow, because the XLK, remember, it's not that far away from its quote-unquote ABCD down on the NDX, and you can see here it's coming into a fairly major support area. So we'll see if it holds tomorrow. That could be, you're always looking when you start getting these kind of pullbacks, you're looking for where the strength's going to come up, and this may be the place that you see it. So that will be one to monitor. XLP just hammered again. They're going after the swing point lows like the Dow. XLU. And it's interesting now, these are going on their own momentum, independent of the interest rates anymore, because interest rates actually went down today as people flocked to bonds because of the market sell-off. XLU, it looks like it's going to hold actually. XLV, remember yesterday it tried to push up. Well, you get an ABCD down today, and it is a confirmed one, it looks like. Yeah, it's confirmed ABCD down. The measurement on that one is going to take you pretty good measurement right down into this area. It's broken swing point lows already. It will transition to bearish tonight, and it looks like it's coming after this little area right in here from June 19th and 20th. Yeah, 19th and 20th. And the last one, discretionary. Discretionary had already broken down, and at this point it's in pretty bad shape. So it comes off the range, does an ABCD down, volume expands. This one's going to push not that much lower. It's going to push down to this swing point low. Okay, so there's more to go on the downside. The question is do we bounce or not in front of that, right? Does this market find a way to bounce up or not? Well, let's try to answer that with a look at the OX markets. So if I pop into the OX, let's look at the bonds first. Okay, now bonds, we were talking about trying to set up a bottom finally. I mean, these things have sold off for a good 4 months straight away. No relief whatsoever. I mean, here's the weekly chart. You set a high back on April 29th. So basically in May. So May, June, July, 3 months. 3 months straight down. And so now you're trying to get a bounce out of there. And they got a decent bounce going. They're coming right up into resistance. Now the high of the swing point low. And this is a good example of a retest regenerate. You've had a very bearish market. Every time it bounces back up into a swing point low, it fails, regenerates lower. It's done that multiple times on the way down. Here's another case where it's trying to do it. The top 106.49. Today we got to 106.25. Volume's expanding comparatively. Over here you had 12.8. Over here today 11.5. Not enough yet tomorrow will be the key. Can you get over that and volume expand and you stay over it? My suspicion is it will fail and you will get some sort of a retrace. Now the good thing, if you want to be in bonds, is that you actually saw some interest in them finally, and you can see it here on the nice volume expansion on the way back up. So my take here is that what you're really going to see is you're going to see bonds poke up, they're going to test, probably fail, come back and set up a bullish ABCD up to take it over that swing point low and will not retest, regenerate lower, and actually go up and test these highs. And the bond market is extremely oversold. I mean, if we look at the bearishness, 94.5 on an MTTF. Folks, that's about as far as you can get. There's not much room left there. So it would not surprise me to see bonds push up, break these swing point highs. As a matter of fact, the way they're set up, you can break them both in one swoop and move from bearish to bullish on the short term. And I believe you're going to see this ABCD set up to do that. So if you're short bonds, you want to rethink your position just a little bit on if you're thinking multiple days. If you're thinking a day, tomorrow may be a day to short them again if you want to flip in, flip out kind of thing, right? But the bonds are trying to turn. Now, if the bonds are turning, that says that this flight to safety that we saw today is probably not going to continue. And we're not going to see a huge sell-off in the equities, and that would also jive with what I'm thinking about the equities. So a little more pressure tomorrow on equities probably as bonds pressure to go higher, and then maybe we see those little bounces take place and get a retrace here, get a bounce in the equities, and then you do the finalization of the bearish ABCDs on the equities, and you do the ABCD up on the bonds, and those seem to be complementing each other quite well. Oil was up big today. We got all the Syria news. People are saying, and we got a volume expansion here too. And look at this, folks. You just broke triple swing point highs. Wow, now that's impressive. Let's go over here. So is that true? I'm looking at the weekly, but on the weekly you don't have a swing point high. You didn't stay 6 bars. So it actually was premature to break out here. Now, most of the time when you break multiples, you'll get a carry through, and I would be surprised if we don't get a carry through today, but the fact that we don't have it on multiple time frames diminishes that thought a little bit. May see a carry through because you really got volume expansion here. That volume expansion probably was a result of a bunch of stops being taken out today. And so my take here is that you may see a takeaway bar tomorrow. I wouldn't be chasing this one, not this time. Sometimes you just gotta look at what's really happening and try to make sense of it, and that's the way that one looks to me. Let's look at gold. Gold took off today, up about 25 bucks. All right, so gold does a doji at the highs. Did it get over it? 137.62, 137.55. You did 11.2 into 9.8, so you're pushing with volume. If I come over here on the weekly we have a high of 136.75, and we got the 137.55, closed at 136.75. So you're over it on the weekly. Now, the question will be is can you stay over it? My take is gold's going to pull back, and you've just about seen the extent of the run here. That'd be my take. So if you're a gold bug and you've had this nice run, you might think about taking a little bit of your profits. Silver, the poor man's gold, as one of the members was talking about today. And silver gets over, still has nice volume. Let's see what it looks like on a weekly. Okay, so over here, 23.10, we closed at 23.59. So the same sort of setup here. That next swing point high is 23.70. So you tested it with let me see, that's got 73.9, and we're 2 days into it, and we've done roughly 14 a day times 5. That's right at 70. So almost the same volume pushing into that swing point high. So it's going to be a close call, but this one also looks like it's going to try to come back. Dollar did not. Of all the things I called last night, I didn't call the dollar right. The dollar faded back today. You didn't see a rush to safety yet. You saw a push into safety from all the other currencies, such as the rupee and some of the others, but they account for so little weight that they don't mean much. The euro worked higher and the dollar worked lower. 50% of it's there, and then the yen also worked higher, and that also worked against the dollar. Now the dollar looks to me, there's no volume on this back. It does look like it's going to hold. Let's see if the FXE shows the same thing. Yeah, it does. So I think the dollar's still going to hold here. Okay, I got a couple questions. One was emailed to me, had to do with GDX. And then I see one here, a feedy on Apple. So let's pop over and take a look at these guys, see what they look like. So we'll start with Apple. Let me get Apple up, and then we'll look at the GDX and see what it looks like as well. Okay, so Apple. So Apple pulled back today about 13 bucks. So it pulls back into this big bar. Okay, the low here was 489.08. 486 was the low today, closed underneath it. Volume is 15.117. You know, if you like Apple, you're not going to catch the bottom more than likely. Apple can trade all the way back to the bottom of this bar. It's into the bar already. That low is 468.05. So if you're gonna work your way into Apple, you better go slow, and just assume that you can make it all the way back down here, because Apple got the big push off of Icon. Icon can announce anything at any time. He can tell you on the next tweet that he sold it all. So you just have to realize that you can get a hit on this, and you've got to be able to withstand that if that happens. So if you're gonna average into Apple, go slow. This would be the spot to probably start. If you remember, Apple on the weekly came into a resistance zone, doesn't have the volume, right? So pullback makes sense. The first swing point high on the way back is 484.94, and if we go back over here to the daily, you can see 484 is almost where we got. I would be surprised if we get into that swing point tomorrow. And so essentially you're going to come back and do your retest regenerates on those swing points, and there's 3 of them. And the 3 of them measure all the way back to 465, which is just about this price point, 468. So this whole area can be a retest regen. Let's go to GDX right quick. The question there had to do with actually shorting the GDX. Now the GDX has been on a pretty good run. Today it was up big and then turned. Okay, so now if you're bullish, this is a good thing actually. You left volume at the top. So you get over the high, 30.94, so you fell on price but not on volume. That says it probably can make it right back up there again. You had another bar over here at 66.5, you did 62. That does look like it's going to pull back, and I would think it's going to pull back into the bottom of this bar, which is where your support zone is. That's at 28.11. So, you know, you're already down to 29, so it's kind of hard to short it here if that's what you're trying to do. I don't think you can think more than that on the first pushback. So what you really want to do if you want to watch this thing is let it come back up here, have no volume, and that's where you short it. You don't short the first leg down. You look for the next one. Okay, so one more question. NOV. So we got an oil stock. Let's see what that one looks like real quick, and then I'll wrap it up here. So NOV. Let's see how it traded today. I saw some of the oil stocks were holding up good today. This one did as well. It was down a little bit, but not bad. So National Oil Wells got swing point highs. This is setting up to go higher, right? I mean, I don't know when it's going to do it. And the nice thing about this one, if you pull it over, is it's setting up on the weekly as well. So you got a weekly swing point high back here. You're about to print, if it doesn't get up there, you're about to print another one. 2, 4, you'd have to go another week. But you've got swing point high on the weekly. You've got multiples here on the dailies. Didn't want to back off today. The problem is I don't know that oil, as I said earlier, I don't know that oil is going to keep going up. It looks to me like you blew out a bunch of stops today and it's probably going to reverse on you. So I'd just be patient here. I would let it break out and buy the breakout if that in fact is what it's going to do. I wouldn't try to anticipate it right now, especially with the weak market. Okay, where are we on the markets? If you think about where we're at, you just had, let me go back to the SPX, you just had the first significant retrace off the highs. Okay, that's finally going to break the backs of the perma bulls, right? They're going to really starting to think about, oh my, do I really want to be in this or not, right? And that's the first thing you have to do to them, because they will always be bullish as long as you let them. And so this is your first pullback. If you go back and look at what's happening now, anybody that bought since July, 1st of July, remember how July was a great month and everybody was so excited about it? Well, they've taken it all away now. And before this is done, they're going to take most of it away. Matter of fact, they're going to pull you back. If I go over to the weekly, if this extends to where I think it will, they're going to take you all the way back to April, the April highs, okay, if it extends that far. What that means is there's a lot of buyers up here underwater. You saw that on this bounce. As I told you last night, it was probably your last escape. You saw it on the bounce. They sold into it. Those that used the escape. Now we get the push. We're going to get a further push. We may get a little bounce first, do a little retest here. This one's going to push down. Those buyers are going to feel trapped, and they're going to have to give up at lower prices if they don't give up here. So if you're wanting to buy this market, pick and choose your spots. Right? That's the way you should look at it. If you're too scared to pick and choose your spots, or if you're underwater, look at what you can get rid of on a bounce. How far can it carry? Well, I think it's going to carry 15, 20 more points at least. Could carry another 30. If you want to withstand that, you can. It really depends on your risk profile and what you're trying to do. That's all on the assumption that when we get down here, that's going to be the bottom. It may or may not be. We don't know that yet. We won't know that until we get there and we get a look at what it looks like. That's neoclassical. You look at test. You see what the market wants to tell you. You react to it. You look at where your risk profile is. You make your adjustments. Folks, I'm going to leave it at that. Hope you had a great day today. Have a great night. And until next time, I'm L.A. Little. This is and was your daily TA wrap. Have yourself a great night, and I'll catch you tomorrow. Good night, folks.